Hey guys, how you going today? It's Riley of the Big Thing in Aussie, and today I'm back talking about stocks. I know it's been a while, but don't worry, we got some top quality content right here for you. So today's video is all going to be on ETFs, or exchange traded funds. What that means is you're essentially investing in a single fund, for instance, like a Vanguard ETF, and then that's going to be essentially a portfolio of hundreds of other different stocks or other securities like bonds or fixed term loans or whatever. So essentially you're investing your money in a very diversified portfolio which is going to track a certain index, and yeah, it's basically a long-term investing. It's one of the things you got to do if you're a passive investor, is to invest in ETFs, and you really make your money over time. So it's all about waiting, playing the waiting game, compound interest, especially as a younger individual. Get started early on the passive investments, and you can have a very healthy portfolio going into your future. So yeah, that's what the video is going to be about today, and I'm going to jump online and you'll see some ETFs now. Okay guys, so we're just jumping on to Google now, so we'll just go type in Vanguard like that. You get Vanguard investments, you want to click on that one, and now this is just an example. There's plenty of other ETF sort of like fund managers out there, like iShares is another good one, Beta Shares, so feel free to go check those out. We're just going to make an example out of this Vanguard here. So essentially what you want to do, get out of that, ETFs, here we go. So Vanguard ETFs, let's have a look. So they have a range of products, but you can just jump on here and it's got some really good, alright, so you're gonna go investments, all products. Yeah, they got some really good products in terms of all kinds of things, as you can see, wholesale funds and whatnot, but we're interested in ETFs or active ETFs today. So we jump on here and you can put in what sort of asset class you're after, whether it be cash, fixed interest, Australian shares, international shares, diversified ETFs, so it's got it all. So as you can see, there's property ETFs, and when you actually click on one of these, so you can sort of see Vanguard Australian Fixed Interest Index Fund. You see they got the management fee here, so how much Vanguard actually charge depending on how much you're investing. So 0.2%, that's pretty small in terms of ETFs. So it's Vanguard are generally pretty low cost, and now you can see the returns. So in 1 year they've returned 10.26%, 3 years 4.7. Yeah, so you get the point. But now we're just going to have a look at a particular ETF, and that's going to be VHY. So hopefully this just lets me search that stock. Yes, so the Vanguard Australian Shares High Yield ETF. So plenty of ETFs out there, but this is a particular one that I've been looking at. It's to do with the Australian shares, and which yield the highest, and I'll explain to you why I'm liking this ETF at the moment. So essentially, here's the investment objective, is to track the return of the FTSE Australia High Dividend Yield Index before taking into account fees, expenses and tax, yada yada yada. Fund overview. So you go down and you look at the this is just an overview, risks, yep, and here you can see the returns delta. So year to date, this stock has achieved a 22.95% return, which is very high. You scroll down further, you see the market cap 47.2 billion, dividend yield 5.1%, so that's pretty good. In terms of ETFs, usually you don't get such a high dividend yield, because like if you're investing in a diversified ETF, for instance, which has money in bonds and stocks and a range of things, you might not get dividends for every sort of like stock that you're invested in. Does that make sense? Like for bonds you get coupons which won't be as high as like bank dividends, and anyway, it'll average out being a lower dividend yield for your ETF. But this one's quite high. Top 10 holdings, so you can see what your money is essentially going into the most. This one, for instance, BHP, Combank, Westpac. So they're like the big four banks. Telstra, Wesfarmers, Macquarie Bank. So you can sort of see what you actually invested in. Management fee of 0.25%. That's still very competitive management fee in terms of ETFs. And then you just want to go over to performance. Have a look here, and it's going to show you how it's been performing. So it's done really well since inception. 9.47%. Standard deviation of 9.13%. So that's essentially the risk factor of the returns. So this is fairly low. I've actually researched a few ETFs, which I probably won't have time to go into today, but this is quite a low standard deviation, which is a very good sign. And you can sort of like have a look at cumulative, how much it's been returning, like given compound interest and whatnot. So that's looking very nice. And then we'll keep going through this and just have a look at other statistics. So you got the P ratio. So that's an index number 17 times. What else do we have? Price to book ratio. Okay, sector allocations. So what you're basically, your ETF here, given that you've invested in VHY, 40% of your money is going into financials, 19% into materials, consumer services 12%, and so on and so forth. So you can see really how your money is being allocated. And what else do we have? Just prices. So you can see what it's been trading at. It's doing quite well. But essentially $60 a share. That's pretty good, considering the diversification that you're investing yourself into. But there's plenty of other ETFs out there, and this is just an example of what sort of things to look for. Now, I think if you wanted to go and invest in this fund, let's just have a look. So, investors with 500,000 or more can invest in Access Wholesale funds. I'm not sure through the Vanguard. Okay, you can start investing with as little as $50,000 per fund. Okay, so there you go. Vanguard want a minimum buy-in of essentially $5,000. Now, you can get around that because you can go through a broker such as ComSec, and essentially ComSec have this stock, VHY. So you can actually buy in for as little as $60. You could buy one share for $60 if you want through ComSec. You could also, you could put in any amount you want through ComSec as well, and have the same exposure to this ETF. And so yeah, that's a really good one. Maybe we can show one more. But yeah, I'm not going to go through the whole ComSec tutorial, but basically you just go into ComSec, type in the ticker VHY, pull up. It should have all the same graphs, same sort of like numbers and everything. So you can tell that it is the same fund on the Vanguard website as on ComSec, and you can feel safe about investing in that one with lower than the buy-in of 5,000 like Vanguard wants you to put in. So going further, we can have a look at another one. I'm just going to go back to Google and just say Vanguard International Shares Index Fund. Click on that. So this is just chasing the index of international shares globally. As you can see, in comparison to the other one, you have a lower management fee. Is this? Okay, so this is a fund. So forgive me, this is not what I wanted to show. I wanted to show an ETF. So Vanguard International Shares. How about let's go US Shares ETF. Let's go that one. Have a look at that. So you can see the sort of numbers there. We'll click on the link here, and this should take us to what I wanted to see. VTS, exactly. So this is the US Total Market Shares Index ETF, and it chases the total US market index. So this is quite interesting because if you want to go back to overview. Now my internet's just okay. We're good. So what you're investing your money in? Number 1, Microsoft. 2, Apple. 3, Amazon. 4, Alphabet. 5, Facebook, Berkshire Hathaway, JP Morgan, Johnson & Johnson, Visa. So you get it. This is like the top market cap companies in the NASDAQ, and it's exposing you to all of them, which is why the price is $150 a share. Because if you look at Apple stocks, Amazon, it's all like 300 US. So it's expensive stuff. So this gives you 150 AUD you can invest in, have exposure to all of that. Obviously, you have to think about the state of the global markets and whatnot. But in terms of just an ETF, look at the performance. Like year to date, nearly 23%. 1 year, 15% return. Since inception, nearly 16% return. Now, in comparison to the other one, the standard deviation, 12.41%. So it's obviously more volatile than the Australian shares one I was talking about earlier. But, you know, that's sort of like more risk, more reward type of thing. And also you can look at the cumulative returns, and you can see since inception, like if you've been investing for 10 years, you're making a lot of money. 347% return off your investment over 10 years. So that's quite big numbers, especially if you're actively putting more money in. So yeah, just to think about, like dividend yield, much smaller. A lot of the biggest stocks on the NASDAQ don't necessarily pay dividends. I know at least a few don't, but still 1.8% of $150 is not really, that's still like a large sort of, well, not large, but a decent sort of return on your dividend. You can see the sectors here, just like before. You go through and you can look at all the data. However, these are just some examples. You can have a look at the price analysis chart and see that it's been rising and rising and rising. Had a bit of a fall, but you know, this all comes into play with the global economy. ETFs are great because you'll earn compound interest, and you should earn a steady capital gain as well. You get dividend yield, and you get exposure to hundreds of different stocks. So in summary, ETFs are a great way to, you know, feel safe about what you're putting your money in because it's so diversified. If one stock comes crashing down, given it's an active ETF, Vanguard might choose to buy another one, and just even out so the return is steady. You should never, like lose all your money in one go, especially in an ETF. That's what they're designed to do at quite a low cost. So yeah, that's essentially the ETF video today, guys. Hope you all enjoyed. Hopefully that made some sense to you. But yeah, it's a really smart decision to start investing in ETFs while you're younger. It's what a lot of people's super is actually invested in, a lot of these like Vanguard ETFs. So yeah, just keep in mind that it does work. There is, you know, evidence to show that people make a solid return off compound interest over time. And it's a smart way to put some savings aside and create an asset which is going to be worth a lot more in the future for you. So yeah, I hope you're having a wonderful day, guys. Like and sub if you enjoyed today's content.